Welcome to today's Explainer. Let's dive right into your top-down pre-market action plan for June 29th, 2026.
Here's the rundown. Futures are bouncing back hard. Alphabet joins the Dow, all in a short, data-heavy week.
Look at this. The Nasdaq is absolutely leading the pre-market charge, sitting a solid 1.2% above fair value.
Macro-wise, the US and Iran traded weekend strikes, but hey, they're heading back to Qatar tomorrow for peace talks.
You know the market prefers talking over punching, right? That's exactly what's driving today's risk-on buy-the-dip momentum.
Check out semis. After taking an absolute beating last week, they're catching a strong 1.1% bid this morning.
We're seeing that exact same aggressive recovery pattern in mega-cap growth too, popping 1.6% right out the gate.
And today's massive headline catalyst? Alphabet's A shares officially start trading as part of the Dow Jones Industrial Average.
Alphabet's already up 0.9% pre-market, totally shaking off that brutal 8% plunge we saw last week.
So, the million-dollar question for us active traders: can these early semi and mega-cap gains actually hold until the bell?
Be careful out there. Month and quarter-end portfolio rebalancing could easily trigger sudden, heavy selling pressure and erase this. Technically speaking, remember that Friday saw the S&P 500 close just underneath its 50-day moving average of 7,363.
So a huge chunk of today's early opening action is literally just traders playing that classic, technically driven bounce.
Pivoting to commodities real quick, oil prices bumped up 1% this morning, hitting exactly $70 a barrel.
Meanwhile, the all-important 10-year note yield is holding steady, seeing only a tiny 1 basis point microscopic uptick today.
We've got a total barrage of daily economic data incoming right before Friday's Independence Day market closure.
Ultimately, can today's buy-the-dip momentum survive this upcoming data storm? Keep your heads on a swivel and manage that risk.